I think the big part is that the tax code is written three ways. It's for businesses, charity, real estate. And real estate is by far one of the best. And it's like, outside of like the tax benefits, it's like you got the debt pay down, you got the appreciation, right? Like, why wouldn't you take advantage of it? You're having one step closer towards wealth. You don't have to start big, you start small. Just take advantage of it and not be scared.
Welcome back, everyone, to the Commercial Real Estate Unfiltered podcast. I'm your host, Caleb David, where we are creating space and building community. And today, I've got a new member of my community that I get to introduce to you. His name is Tony Hoong. He's a CPA, the founder of the CPA Dude, which is a tax strategy firm that helps real estate investors and business owners maximize their savings. Leveraging his background with Big Four accounting firms and Uber, he specializes in tax advisory and wealth preservation. Tony's also a digital educator dedicated to simplifying complex tax laws. And I think my intro was a little bit messed up there, and so I think you it's like I'm doing tax strategy over here, and I don't know what I'm talking about. So, Tony, welcome to the show.
Oh,
We
thanks for
are
having us.
unfiltered. Yeah,
Yeah.
absolutely. So, Tony, maybe give us a little bit of background how you got into this field, and kind of how what led up to that, and then we'll kind of start tackling some tax strategies, talking about real estate, but would love just to hear a little bit about your story.
Yeah, for sure, for sure. Yeah. So yeah, just wasn't by design, but good old, my parents are from China and they're like immigrants. They're like we had a Chinese restaurant and they put me to work since I was 11
Yeah.
and also brainwashed me to become like a doctor since then, it's like what all Asian parents want. You want their kids to become doctors and had that dream actually going into first year of college was going to do biology and then fast forward first year was like I got, straight A's in parting and straight B's on the grades. And my dad was just keeping it real. And he's just like, dude, you're not gonna make it to like med school. I'm glad he said it, like actually, versus like giving me false hope.
Yeah.
So then I quit and then actually dropped out and went to go run one of his restaurants. So we bought a restaurant down in Iowa, originally from Minnesota before moving out to the Bay Area. And then did that for like a year and a half. And then my mom was like, I didn't come to this country for you not to have an education. And I was like, all right, so we sold it. And I was like, what did I go back and do? And it's like accounting. It's pretty practical. You had to
Yeah,
use it day
everybody
to day
needs
at the
it.
restaurant. Exactly. It's a guaranteed job. And then, once I started going at it there, and it was like, all right, eventually got, into it. It was like double major in information systems because you had to have 150 credits to take the CPA test.
Yeah.
And then, everyone says you gotta work at Big Four, right? It's to drink the corporate Kool-Aid, this pyramid scheme, I call it. And, worked at KPMG. I did state and local taxes there. Ironically, completely random, like how I fell into it, but it actually served a great purpose because I actually learned all the state stuff. And then later moved to California, worked at a real estate firm, and then where I was doing all the taxes and audit actually.
Yep.
And then eventually was like, wait, it's pretty expensive out here. We need some more money. So
Yeah.
started the CPA Dude just as a complete side hustle, December of 2019. And I was working at Uber at that time. And then eventually COVID happened.
Yeah.
And then I saved like 2, 3 hours a day from commuting and just start ramping up the business pretty hard.
Yeah.
And then by April of 21, I was able to step away full time. So completely random, like how it all fell in. But it was just
Yeah.
like I had a CPA license, like happened to know a lot of like real estate. My parents had a lot of real estate, and they always asked me how to save money on real like taxes with real estate in their
Yeah.
business. And like the fast forward, just had like practice and learn. And we're started from a one person show. And then we're at 48 people now. So just
Wow.
trying to grow the company, just expand as fast as possible.
That's pretty incredible. I always love hearing the stories of entrepreneurs and kind of how you got there. And it sounds like you're pulling some talent from Big Four and major tech firms. What are some traditional CPAs getting wrong?
Yeah, just the main part is, I think CPAs are just really great practitioners. They're just not business people
Yeah.
at the end of the day, and not just having like understanding what do clients truly need, and just I think that's the biggest part. They just don't have the empathy for what the person is. They're like, hey, can you find
Yeah.
my taxes? All right, cool. But like, being I think with my parents, I think them being business owners and then also being real estate investors, and they're always like, how do we save? How do we save? And then
Yeah.
I think that's the biggest part. Is like they're not saving money on taxes; they're just keeping you compliant, which is super important, right? Literally, entire Big Four compliance practices are built to keep Fortune 500 compliant with the IRS rules.
Yeah.
So, when you start up shop, that's what most local CPs are known for, just
Yeah.
like filing those taxes, but they're just not planning is the issue.
Yeah. Okay. So it sounds like you've got since you're kind of pulling from some tech firms that maybe you're a little bit more tech forward than most typical CPAs. Like, how does your approach save, that tech forward effort, save investors more money than the old school Excel spreadsheets and all of that?
Oh yeah, for sure. Yeah, just in terms of like just tech, just I think just service speed. So one feedback part when I heard a lot when we were growing up the company was that a lot of CPAs just take like weeks, months, never to respond back to clients.
Yeah.
So like for us, like we have a fully remote company. We have like no real true physical locations whatsoever. So everyone's spread out across the world. And so we use, like a secure platform. It's called TaxDome. And essentially you can message all our client, like message us, message clients. It's all there. It's the one hub for all the documents. And then it has a mobile app even. So really just like keeping it chill, hence the CPA Dude name is like, it's almost like you're just kind of texting back and forth, but all in a secured platform. That's one way of just like bringing the tech fast and forward to them. But then the second part too is now just doing things at scale with just very good people. So people from tech companies, IRS agents, any talent that's just good, you arm them with the current tools, they can just produce real well. So just having reminders, like, because like taxes is a more behavior, emotional thing,
Yeah.
shockingly, than it's the numbers, black and white.
Yeah.
And it's just managing people's behavior. So I was talking to someone else before today. I was like, are you the type of person who likes to have a refund, or are you the type of person who likes to owe money? And
Right.
like shockingly, like you technically want to owe money
Mm,
because that's your own money that you have to pay the government. But if you get a fat refund, you don't get interest with that.
right.
But emotionally, everyone hates owing, even
Yeah.
though financially it makes the most sense. People love refunds. So
Yeah.
I had to ask him, like, hey, on this spectrum, which one are you? There's no right or wrong answer,
Right.
right? Like emotions with money is always something else. You can't predict how people respond towards it.
Yeah. Absolutely. Well, in your experiences, you do a lot of work with real estate investors. Where do you find that most real estate investors fail to see where they're just like leaking money on taxes?
Oh yeah, that's the big part. So yeah, the first one is it actually starts with just the foundation of bookkeeping and accounting. So a lot of real estate investors, they're great at analyzing the deal, but then when it comes to actually knowing how much money they're making each month,
Yeah.
it's not so good. So their books are usually not in order, and it's a tough service to be in because someone needs to do the bookkeeping. The landlord is like, well, I bought a rental property to have more financial freedom. I didn't sign up to do bookkeeping.
Yeah.
But then they can't really outsource it. But they can, but then the fees don't make sense.
Right.
So it's like if you're only getting $100 a month off this long-term rental, I mean, any accountant's going to charge you at least 25 bucks an hour just to do the books, and to close the books for reconcile, it's going to take at least a couple hours. So then half your profit margin goes away. So number one is just finding some way to do it with technology. So with Claude, with Kick, it's own platform, Digits, QuickBooks even is utilizing that. So having books, that's where the tax leakage starts at.
Mm,
And then say you actually do have bookkeeping, let's say you're more advanced, you're at level two, is actually not knowing what you can do with taxes. So most people buy the property and they think it helps them on taxes. Shockingly, it doesn't. So all real estate, by definition, is considered passive activity. Passive activity doesn't offset active activity. So it's like oil and water, two don't mix. So
yeah.
they're like, I just bought this rental. Am I not saving money on taxes? I'm like, 8 times out of 10, you're not. And then the level three, though, finally is understanding how the game's played. That's real estate professional status, short-term rental loopholes. Like, where can you actually utilize this to offset your active income? So, kind of three different levels towards it.
Yeah.
But really understanding, are you stuck at level one, got no books, or level two,
Yeah.
where you bought something but you don't actually know how to like use it, and then level three, you're playing the game the right way.
Yeah. So it sounds like at level one, it's kind of like they're just trying to do their basic tax compliance, just the bare minimum. But how does that compare to like an active tax strategy?
Oh yeah, exactly. So like an active tax strategy would actually be like we're mid-year through the year now, and it's understanding what's my total income
Mhm.
and what's my end goal. Like it can be whether 1 year, 5 year, 10 year goal,
Yep.
and how does my tax strategy fit into my goals. So that's why we always ask our clients like, hey, what are your goals? We'll see if it can help you or not.
Yeah.
And from there, it's like, okay, I want to be financially free in 5 years, which means they'll quit their job. So the whole active tax strategy where that portion comes in is like, how do we get to that end goal? that end goal is that, okay, if they're married, can we move one person into real estate professional status so they can offset all the active income
Mm,
to then recycle and build more wealth and properties? Or is this like, hey, well, I just want to buy one property every single year. I'm single. Okay, maybe short-term rental loophole strategy goes in, but it's really understanding how much money do you make,
yeah.
where are your goals at, what strategies do you want to do. Usually, are like we create like a tax savings blueprint. It's about like 3 to 7 strategies, and we just hold them accountable towards doing it. It's actions, the emotions, and behaviors we have to change.
Yeah.
But that's what an active strategy is. And then like twice a year, we refine it. So your
Yeah.
income could go up, go down. I just had someone that like with the whole open AI thing, I think they're landing in on $6 million. And I
Mm,
was just like, oh, okay, we need to think about a plan here. I was like, I wasn't expecting to have $6 million. And we're like, they were like high six figures, like middle, like,
yeah.
middle in that range. I was like, okay. So that's why a strategy that's active that keeps on going. It's kind of like the doctor. You have to see your doctor once a year. You
Right.
should see your CPA at least twice a year.
Yeah, no, I think that's really important and very practical advice because I think a lot of people just, it's like that one time a year, you just dump all the documents, and you're like, here you go, figure it out, But I think having that active strategy, because I think a lot of people miss out, a lot of real estate investors miss out on the fact that it's one of the most tax advantaged asset classes,
Yeah.
And, what are some of the things that, what would you, how would you kind of take someone from that level one, level two to level three, and what does a true tax transformation look like for a high income earner, if they're moving capital into real estate? Maybe they're getting out of the stock market some and they're kind of reinvesting. What does that tax transformation look like?
Yeah, yeah, exactly. So it really starts at like where we sit at like, what do you want to do? How much do you want to make?
Mhm.
Like, yeah, you should put that on paper. Otherwise, you keep chasing and never stop.
Yeah.
So it's like, what does that look like? How much you want to make? And then let's just go through how we're going to get there with you. So sometimes it's like almost like financial advising, but we're not like financial advisors by any means. Always been in service. I was like, we should probably start that, but we haven't yet. And so we go from there and seeing, okay, like where do we pair in of like, okay, you got books down. All right, cool. Next step is like, how can we start shifting some of this into, we always want to get to the top of the mountain. Top of the mountain being real estate professional status or short-term rental loophole. And it's like, all right, pick your poison. Which one can we do?
Yeah.
And then say we do real estate professional status. That's just going to be the best way for a power couple
Yeah.
to reduce their income. Obviously, you got the high income earner and you got the stay-at-home investor, not the stay-at-home mom or dad's the
Yeah.
stay-at-home investor. And then from there, the stay-at-home person can start investing into large deals,
Yeah.
doing their own deals to offset the active income of the other individual while
Yeah.
they can still get loans. So it's really
Yeah.
just seeing like we got to make sure it's like tidy though. Like it's not easy to get in. That's why it's like takes a couple of years maybe. So because you have to have real estate professional status is 750 hours or more in the trades or business of real estate, and then two, you have to have over 50% of your time in those trades or businesses, and you actually have to material participate. So
Gotcha.
it's like we have to make sure all the documentation is good. Otherwise, it's going to blow up under audit. And with the rise of AI, audits are going to be coming up more and more here.
Yeah.
So I think that's a big part is like making sure like all your documentation is like set in stone.
Yeah. Well, and that's great information because I didn't realize that about real estate professional status and what those requirements were. And so if I don't know that, and I've been doing this for 14 years, always
Yeah.
love this
Mhm.
because I always get to learn something new. And you kind of referenced the short-term rental loophole. Can you talk to us about that a little bit and what that looks like?
Yeah, yeah. So coming back to like, we said like all real estate's defaulted as passive, and passive losses don't offset active income. So buying a long-term or mid-term rental doesn't help you per se in the current year for tax purposes specifically. However, a short-term rental is considered active if you hop through the hoops. So the hoops they say you have to hop through is that one is you have an average stay of 7 days or less throughout the whole year. So total days divided by total stays. So you get a couple 30-day stays and a crap load of 2 day stays. As
Mm,
long as that number is 7.0 for the year, you hop through hoop number one.
okay.
Hoop number two is that you have to show material participation. So that's either 100 hours, you work 100 hours, no one else works more than you. Two, substantially performed all services. Three, 500 hours, anyone else can work more than you. And then now you've gone through hoop one, hoop two, you cross the finish line. And what you can finally do is use a cost segregation study,
Mm,
which will fancy, expensive study that's tell you how much depreciation can take,
yeah.
burn all the depreciation in year one, and use that to offset your active income. So it's how, and you don't have to be married to do this. You only need 100 hours, right?
Yeah.
So to do this portion, it's a lot of our W-2 people, they do this. A lot of single guys also, they do this strategy, and
Yep.
it builds fat wealth really fast too.
Yeah. Yeah, absolutely. Well, that's good to know. I mean, cause I live in Colorado, so there are a lot of people that are getting into that space, that short-term rental space, because it is kind of a destination. So I think that'll be really helpful for our listeners. What are some of the biggest mistakes that investors make that kind of disqualify them from this? I mean, obviously you've put some measurements there and things they need to reach. Is there anything else, any other mistakes that investors, maybe are overlooking that
Oh
they?
yeah. So yeah, one mistake is definitely personal use. So like you may want to like buy a place and say if you want to go skiing, you're like, I'm gonna use it in December for like 2 weeks.
Yeah.
You'll actually have to prorate part of your deductions.
Mm,
So like the first year you buy it, just don't go to the property for personal leisure. You go
yeah.
to the property to work, but no play the first year, my friend.
Yeah.
So you just only work because you're going to lose a good chunk of your deduction. So
Yeah.
personal use is definitely one issue to have. The second one is just not documenting. So like I said, 100 hours, no one else works more than you. On your invoices, you got to make sure how many hours are your cleaners, how much your contractors are
Mm,
actually working there. So you have to prove it. Burden of proof is on the taxpayer.
yeah.
So not having the proper documentation is going to be that. And then three is just like not reporting it correctly. So unless like your CPA truly knows how to report it, I've seen some like botched ones.
Mm,
Like some people put these on Schedule C's, and I'm like, no, it goes on Schedule E's. And Schedule C's are for like small businesses. Even though it feels like a small business, it's supposed to go on Schedule E. Also, getting the useful life wrong. Some people depreciate these over 27 and a half years for a short-term rental, but
right.
it's actually 39 years.
Mm,
So just not knowing the nuances and triggering it out the right way, or they may not even be aware that you're doing a short-term rental loophole, and then they'll just classify all your losses as passive, goes into the passive piggy bank that you can't unlock until you sell the property. So there's kind of like those are three biggest ones I've seen that, over the years working with clients, like, okay, you did that. Those are all no-nos.
yeah. Well, the thing I like that I hear from you is like you're very involved with your clients' lives and actively participating in this. It sounds like you prioritize relationships with something that really resounds with me. Like if someone's struggling with their current CPA, they don't really know, they really reach out to you. What's kind of that initial conversation look like? And how would they expect to kind of their relationship with the IRS change if since you're working with them more year round versus kind of that one off?
Oh yeah, for sure. Yeah. So yeah, for us, it's like all our discovery calls, they're all free. Like, because we just don't want to waste anyone's time. I always like joke and say like finding your next like CPA firm's like dating. Like you just
Yeah.
gotta find that one until like you feel comfortable. Because
Yeah.
if you go from CPA to CPA, you're gonna have to re-explain how much money do you make? What do I do? What's my baggage? It's the
Yeah.
same thing, same story. So take your time,
Yeah.
find the right one that can actually deliver and just be like, hey, just be honest, right? So it's just like knowing, understanding like how they work, what their situation is, and then seeing from a goal perspective. Like we generally like to lead from a place of savings if we can. If not, we just help them with compliance. But we want to really make an impact and making sure like, hey, we save you
Mhm.
at least the initial like our tax strategy fee. And
Yeah.
then if not, we're just gonna refund you because that goes back to relationship. Like our name is everything. So like we just don't want to have a bad review, to be honest. I'm like, hey, I like, dude, if I can't find you $3,000, just have all your money back. I'm sorry.
Yeah.
But we usually don't pitch people unless we can find an impact for them, or we just tell them straight up, like, yo, dude, I can save you a single dollar, but I can sure as hell keep you compliant. Like, because what
Yeah.
you're doing right now is not compliant.
Right. That's not something
Yeah.
you want to mess with.
Yeah, exactly. Yeah. And then just having like year-round support. So like even people who just do our compliance stuff, we actually started up a school community and we're just trying to build a bigger like community within our clients and is having more access. We heard a lot of feedback throughout the years from like other like we'll ask people like, why do you want to switch?
Yeah.
And one person told me yesterday, he called up his accountant, finished up the call, and then he got an invoice. And he was just tired of these surprise
Yeah.
call invoice. He like, I understand I got paid for people's time.
Yeah.
It just would have been nice to know that
Yeah.
I'm gonna get billed. Otherwise, I probably wouldn't have called you.
Yeah.
So yeah, that's why we started up a school community and we're like ideating. It's been live for like maybe like 8 months. It's a work in progress, but the general premise was to allow people to get access to us without having to pay an additional fee.
Yeah.
and have it include as their services, and then also just ask tax questions. So
Yeah.
I'm in there every other week myself, and if people want to get access to me versus paying my hourly rate, that's totally cool.
Yeah.
And just more added perks. So we're just trying to really build like relationships, community. The sad thing and the grim joke is like nothing's guaranteed but death and taxes. So like
Right.
unfortunately, we will be filing taxes until either you die or I die. So it's like, okay, let's just have a fun time with this and not make it miserable.
Absolutely. No, I love that approach because when it comes to numbers and all that stuff, like I can I can put a deal together all day long, but the behind the scenes stuff, having that support, I think and that person that you can depend on and have access to throughout the year would definitely be a huge benefit.
Oh
Um,
yeah.
so say someone, they're happy with their standard accountant, they're good with it, but why do you think that they still need to have a strategic planning blueprint?
Oh yeah, great question actually. So it's like I always tell folks like it's do it once at least in your life. It's the I compare it to like you don't build a house without a blueprint. You don't like go work out without like a workout plan. Like you don't have a wedding without a wedding planner.
Yeah.
Like why would you file taxes without a tax plan? And like generally speaking, if you do it once, unless you completely change careers,
Yeah.
you don't, it's like set in stone, really. So, like, if you're working W-2, here's your plan, and
Mhm.
that's your plan until the tax code changes. That plan is pretty much good.
Yeah.
Same thing for real estate. You're a real estate investor or you're a hybrid of the two, plan's pretty much good.
Yeah.
And then business owner, same thing. But unless you have someone that goes from W-2 to full-time business owner, W-2 to full-time real estate, then you have to change the plan, don't get me wrong.
Yeah.
But I mean, there's only what, three permutations of tax initial tax planning that you can do. But the big thing is like you now have a map to navigate how you pay the least amount in taxes. I was speaking on Sunday and I'm over near California and, us literally just sitting here and breathing air, like you're getting 30% of our money getting sucked away that you don't even know. So it's like, why wouldn't you invest one time into a plan that will work forever every single year,
Yeah.
given those small changes? That
Yeah.
will save you a ton of money that has an ROI on it. So it's like even if you do a tax plan once, it's just a matter of time until you get your money back. You're never going to lose money on a tax plan. It's just how fast do you see the result?
Yeah. No, that makes sense. Well, kind of as we wrap up, is there any other unfiltered advice that you might have of something that's kind of on your mind or you think that our listeners should hear?
Yeah, I think the big part is that the tax code is written three ways. It's for businesses, charity, real estate. And real estate is by far one of the best. And it's like, outside of like the tax benefits, it's like you got the debt pay down, you got the appreciation, right? Like, why wouldn't you take advantage of it? You're having one step closer towards wealth. You don't have to start big, you can start small, just take advantage of it and not be scared. So like the big part is, I've had doctors really pay our full fee for the whole year. They took zero steps and I'm like, "Hey man, it's been a pleasure serving you. Like,
Yeah.
you just paid for like very expensive therapy, right?" He's like, "Oh yeah, I know." I'm like, "Okay, that sounds
Okay.
good, but yeah, just take some action with
Yeah.
it just to stay because like my big thing is like my parents, they didn't have a good tax plan for their, Chinese restaurant. I always joke and say I could have been a trust fund baby,
Yeah.
taking that money because at $10,000 every single year for 30 years, compounded at 8% is 1.3 million. Like, do you not want a free $1 million from the government? It's your money too, though. I think that's why I'm
Right.
like so like passionate about it. I'm like, bro, it's like, like, would you not want your own money back? I'm like,
Yeah.
you commute hard, you put up with crappy coworkers, maybe, and like work is over a third of your life. Like, why
Yeah.
give away anywhere from 20 to 50% of your income? So my
Yeah.
big thing is like do some tax planning, call up your CPA and just be like, yo, dude, what's the tax plan?
Yeah.
And just start the conversation.
Yeah. And so does your team serve clients all over the country?
Yeah, yeah. So we unlike lawyers where you're like, you have to have a state bar, CPA licenses actually go across all
Okay.
50 states.
Okay. That's awesome. Well, Tony, thanks for being with us. How can people find you? Where can they connect with you?
Yeah, so everything is the CPA Dude. The fastest one's probably Instagram, the CPA Dude, and then also our website's the CPAdude.com. And then if you want to call us, it's 254 CPA Dude.
All right. Well, that's easy enough, man. Tony, this has been awesome. One of the more fun conversations I've had with the CPA in a long time. So I
Thanks, Caleb.
appreciate it. And thanks again, everyone, for listening. Give us a follow. Follow Tony and his team at the CPA Dude. And if you guys have questions, reach out to us. This is a resource to you. So we look forward to serving you all as we continue to create space and build community. We'll see you next time. If today's episode gave you valuable commercial real estate insights, subscribe, rate, and share it. Connect with me and the David Commercial Real Estate team through the show notes. Remember, real estate is more than buildings, it's about building community. See you next time.